We got to stop fretting about how so much of our gains are concentrated in tech stocks and start thinking about why that's the case and how it may not be nearly as worrisome as you might think, especially after a day where the Dow gained 224 points, S&P advanced 0.76%, tech-laden NASDAQ jumped 1.12%. It was a wildly positive session that threatens to make the month of January a darn good one. That's right. I say that the market's concentration and fixation on tech's a lot less nefarious than you might believe. That's one of the reasons why we own the Super Six for my charitable trust, meaning Apple, Amazon, Alphabet, Microsoft, Meta Platforms, and, of course, NVIDIA, which, by the way, is roaring after hours because of a fantastic set of numbers from Supermicro, which, if you stay tuned, you will hear from later. It will be a treat, but only if you're bullish. I'm also not panicked by the market's supposed lack of breath, because if I had sold out on this fear, I would have missed days like today, a day where interest rates fell dramatically after we learned that the government doesn't need to borrow as much money as we thought. That is terrific news, people, in a market where money managers are very worried about a potential tsunami of government bonds wiping them out. More importantly, I don't worry about the concentration of winners in tech because, alas, the concentration makes sense, and it does so in a really bullish way. See, rather than fearing the narrow breath, you need to know why. It's the clients, stupid. That's right. You need to start thinking about what a company makes and whom it makes it for. When we're dealing with tech, their products are largely made for what we call the enterprise, for businesses, not individuals. And the enterprise has a lot of money to spend. But if your clients are hostage to the consumer, you're struggling mightily to make the numbers. In other words, it's not about tech versus non-tech. It's about the enterprise versus the consumer, and I like that dichotomy. I want to start with the shop-worn Magnificent Seven, the suddenly atavistic rubric for the winners in the market because Tesla no longer qualifies. We've always thought of Tesla as technology on wheels, a robot car. That's because Elon Musk taught us to think that way. He bridles when people call it a vehicle, which is a consumer product. That was fine as long as demand held up. Now demand's headed down, and it's no longer technology on wheels. It's a company that sells cars. Cars that are bought by stretched consumers who don't have enough money to afford them, especially because financing charges are so high.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.